Hey there traders, thanks for joining me for this video. This is Jeff from the Stock Bandit, and in this video we're just going to cover the major averages. Take a look at the indices as we head into a brand new week of trading. So last week was election week. It was the most highly anticipated event of the year as far as the market's concerned, and we rallied a little bit on Monday and Tuesday ahead of that. Well, then on Wednesday we gapped lower and we never looked back as the market really displayed its dissatisfaction with the outcome of the election and turned its attention toward the coming fiscal cliff, which has been a big concern for the market, but now it becomes front and center with all the other unknowns now out of the way, with the big one being the presidential election. So what that did was took us to new correction lows for each of the indices. For the Nasdaq, we confirmed now 4 lower lows. Okay, I'm just going to kind of highlight where these are, and we've now confirmed 3 lower highs. Now the next bounce would have to exceed this level up in here to break that string of lower highs, but this was the high right in here. Now we've created lower highs and lower lows, and this is, folks, what you call a downtrend. And this is what we've been mentioning here for many weeks now, is the fact that this market's been in correction mode, and it's a time to continue to exercise caution and raise cash if you haven't already, because if you haven't noticed, it's been pretty ugly out there. Now for the Nasdaq, this index gave up about 2.5% last week. We filled this gap right here from early August. That took us down to 29.09, and that's about where we finished the week. We went out at 29.04. Now we did test this level right here, and as I zoom out, you're going to see the importance there. That was at 28.87, and that was the Bin Laden high from May 2nd of 2011, the day after our president came on TV and announced that we got Bin Laden. That was on a Sunday night, if you'll recall. Monday marked the high for the remainder of the year for 2011, and then we basically came down and tested that same zone this week. Now, is that going to hold? I don't know, and I'm not here to really claim that we're going to or we're not going to. The fact of the matter is we are correcting. We've become a little bit short-term stretched here. Maybe odds favor a little bit of a short-term bounce, but odds are also heavily slanted toward the bearish argument here with all these lower lows and lower highs. So we'll continue to watch this 29.61 area that we just broke down from, and we've also got a gap down here to this area right in here, which takes us down for the Nasdaq to the late July gap. I think that was the 25th, and that goes down to this 28.54 level. Okay, I'm looking at the closing price, 28.54 on this date, July 25th, and that is where this unfilled gap is, and that's kind of the next little level that we may gravitate toward if the weakness persists. Now maybe our government is able to get something solved for this fiscal cliff, and there's hopes that that will occur, but however, knowing them, they're more likely to wait till the final moment to do so. So let's move on. For the S&P 500, we came down and also challenged that May high from 2011, the Bin Laden high. That was at 1370. We got on Friday within 3 points of that, 1373, before bouncing just slightly and going out barely positive on the session. This index gave up more than 2% as well. We broke this 1395 zone, and now we're kind of clinging to a previous level here, but once again we've got lower highs in place, we've got lower lows in place, and the trend remains definitely down, and maybe we get bounces, but every bounce in recent weeks has been leading to selling pressure. What the what the bulls really need to do is produce not just a decent bounce, but they need to produce some support on the next pullback after we get a bounce and produce a shift of sentiment here with the creation of a higher low, and so far we haven't done that. Let's take a look at the Russell here, which the previous week had bounced up to this 830 level, and that was where this key resistance at 833 is, as well as this downtrend was. And then last week we got right up within a few points of that as well, only to sell off very hard and go out at 795 on the week. So this index also is really struggling and has a gap from August 2nd down here, and that goes down to the 768 level, so that's kind of the next big level. Although we are a little bit short-term stretched here, there's still room to continue tumbling here for the Russell. We've got the Dow, which broke 13,000 and this 12,977 area. It also got beneath the high from 2011, and that's that 12.7 area is kind of the next zone here that we may see this index kind of come back down and challenge. So we got within 43 points of that on Friday, so we're kind of respecting this level here as well, which has, you can see, been important on a number of occasions. And then it was ignored for the summertime, but now we're coming back to that area for now, and maybe it's going to produce a little bit of a rest here for the market. And then finally we've got the VIX, which is the volatility index, and as fear goes up, it tends to correlate with stocks moving down. So the higher fear becomes, the closer we may become to a turning point in the market if this is going to be a long-lasting major correction. So far, we're off several percent, but it's not been that 20% type of decline that many may still be calling for. However, the VIX cleared this descending trend line here a few weeks ago. That was around 16.5, and it's been just kind of churning beneath that, or above that, I should say. If it's able to get back through this 20 area, that's right in here, that's this resistance area, then we certainly could see volatility and fear continue to spike and really accelerate up. For now, it's elevated, and it's something to keep a close eye on. So the indices are still in correction territory. It's still a time to be very cautious and very careful out there. We've been in cash for some time now, and we've avoided this, and it's really allowed us to stay objective. So if you're looking for some trade ideas, we've got them. Be sure and check out the trial that we offer as well. Thanks for joining me for this video. I will be back here soon with more, but until then, trade like a bandit.